We'll talk a little bit more today on whether you should be buying shares with the Sensex at 41,000 and the Nifty at almost 12,100 points. Many of the readers are asking us whether we should buy into stocks now, given that the strong momentum in stocks at the moment. But if you really see the index, which is at 41,000, it's a new record. But this index movement has largely been on the back of 4-5 stocks. So you have stocks like Reliance, Hdfc Bank, and Hindustan Unilever. All these stocks have contributed, plus the banking stocks like ICICI Bank and SBI have all contributed to the Nifty moving higher and the Sensex at 41,000 points, which is a record high. So what we are trying to tell our readers is there are just a handful of stocks that have taken the Sensex to record highs. But if you look at the broader markets, these mid cap and the small cap stocks, they are nowhere near the highs that they were quoting at, which means that the markets are just moving on a select few stocks. Now, why does that happen? Generally, what happens is institutional investors, large mutual funds, foreign portfolio investors, they chase just quality stocks. So what is happening is they are chasing just those few set of stocks, Hdfc Bank, Hindustan Unilever and your Reliance Industries. They are chasing those few stocks, which has propelled the index to 41,000. The broader market still holds value. Now the GDP which came in was at just 4.5%. This is what has played havoc with the broader markets. Growth has not been there. The GDP numbers are poor. So what is happening is, take for example media stocks, take for example metal stocks, take for example export oriented stocks, all of them have crashed and are quoting at very, in fact some of them are quoting at multi-year lows, which make them a very attractive proposition. So what we are telling our readers is, if you're going to buy at this market with the index at record highs, look at value in the broader market, look at some good media stocks, look at some metal and mining stocks. Look at stocks like from the oil and gas space like a Gail or an Ongc. In fact, if you study the dividends of Gail and Ongc, you realize that the dividend yield on these stocks comes to a good 5.5%. Similarly with Coal India, they are offering you very good dividend yields. So look for stocks from the sectors that have been badly beaten down, which have not climbed and still offer good dividend potential. A stock like Jagran Prakashan, for example, at 58, 59 gives you a dividend yield of 5.5–6%. Over and above that, the stock is now, the board of directors are set to meet to decide on a buyback. So even the companies are realizing that their stocks are not valued where they should be valued, and hence they are going in for a buyback of shares. As we mentioned, a company like Jagran Prakashan, which will be a very good stock at the current levels. So what is happening is, you need to look at small cap stocks, you need to look at mid cap stocks where there is value, you need to look at stocks where there is a good dividend yield. For example, a stock like Karnataka Bank at 77 rupees offers a very good dividend yield. The stock is not very far from its 52-week low of 68 rupees. Here again, there is a value in the stock. The price to book on the stock is just 0.49. So there are many stocks that offer value at the current levels. You just need to do a little bit more research. Index stocks are heavyweights, as we mentioned, are at record highs. So there's no point in chasing Reliance Industries at 1,600 rupees. You'll need to look at value in the broader markets, and that's where your money is going to be made.